Assalamu alaikum wa rahmatullahi wa barakatuhu. Welcome to this webinar. This is inshallah our 21st webinar. And here we will be talking about a very important topic. It's a short topic, but I believe there will be a lot of questions. And the topic inshallah that we will be discussing today is what are the options available to a Sharia compliant investor when his Sharia compliant stock turns non-compliant. Right, let's get started. Assalamu alaikum to everyone who just joined in. Today's webinar is webinar number 21, and inshallah today we will be discussing the micro topic of what to do if your Sharia compliant stock turns to be non-compliant. This presentation will take less than 30 minutes, inshallah, and then I will take Q&A. Right away, I will share my screen so that we can start looking at my presentation. There we are. So as I said, we are going to discuss what to do if a stock turns non-compliant. Let's move on. What is the agenda for today's webinar? So why do stocks change Sharia status? So one of the first questions that will come to your mind is, if a stock is Sharia compliant, why can't it remain the same all along? That unfortunately is not true. Stocks which are Sharia compliant can change their compliance status. So we will also study in this webinar, why do stocks change the Sharia status? So the reasons of it. The second and the most important part of this webinar today is what to do if my stock becomes non-compliant. So we will study all the scenarios that are required under this topic. Just a second. Just a second, I just need to change a couple of my settings over here, and I will be right back. Sounds good. Yeah, sorry for that. The third thing that we will inshallah study is what to do if I am already invested in a non-compliant stock. So one of the most popular question that we receive is an Islamic investor says that from today onwards, or very recently, he found out that there is a criteria which can make a stock to be Sharia compliant or non-Sharia compliant. But I have legacy investments which I had invested previously, and I was not sure whether they were Islamic or not. What to do in these scenarios? We will inshallah discuss this as well. And the last thing before the question and answer session is, what are the purification rules? I will not take this separately, but I will discuss this along with all the scenarios that we tackle. So let's get started. So why do stocks change Sharia status? There are three reasons which affect the Sharia status of listed companies. So these are the three primary reasons due to which a stock can become non-compliant, or if it is already non-compliant, it can become Sharia compliant as well. So as we all understand by now that compliance assignment to stocks is a dynamic process. It cannot be given once and stay the same all along. There is a detailed article which is also available on our blog which talks about this. But let's study the reasons over here itself. So one of the key reasons is change in revenue composition numbers of the company, or a new financial number might have come in, whether quarterly or annual, or a compliance assessment can change due to changes in market cap. Let's look at all of these things individually. So the first reason that we said is change in revenue composition numbers of the company. So companies in their annual reports disclose their revenue composition. So quarter numbers, when they come out, they do not have clear information as to the revenue breakup of the company. So one of the reasons that a sector assessment is taken on an annual basis is because the annual reports contain that revenue breakup. Now, if the revenue from non-permissible areas changes, it will affect the business sector compliance of the stock by either going above or below the 5% threshold. As simple as that. So if a new financial number has come in, wherein the revenue breakup it has changed of the company, and analyzing that revenue breakup of the company, if the company now breaches or is under the threshold of sector compliance, which is 5% of total revenue, that can lead to a change in compliance status of the company. So one of the reasons that a company can change compliance is change in revenue composition numbers of the company. The second is due to the financial ratios. So if a new financial number comes, whether quarterly or annual, it can affect the compliance status. So every listed company discloses its latest financial numbers every quarter. Using the latest quarterly numbers for the company's debt, cash, and liquid assets, the three financial ratios that are being compared, as well as accounts receivables, a company may fail the Sharia compliance test due to the latest ratios breaching the compliance threshold. So if the latest financial number has come in, and using that latest financial number, the company's financial ratios now breach the thresholds of Sharia financial ratios, then this company can change its Sharia status. Let's look at the last reason, which is the most dynamic: changes in market cap. A Sharia compliant stock may turn non-compliant if its market cap is falling, which leads to it failing one or more Sharia financial ratios. So if the market cap of the company generally falls, it is more likely that the company may fail one of its Sharia financial ratios. So one of the reasons that a company becomes non-compliant could be because of its falling market cap, and it can become compliant if its market cap increases. So the three reasons are change in revenue composition, financial numbers can come in, which can lead to change in Sharia status. And the last thing is changes in market cap. Because Sharia compliance assignment is dynamic, Islamicly App updates the compliance information on a daily basis, which is 5 trading days in a week. Hence, the information available on the Islamicly App is the most updated one. Alhamdulillah. Let's move on. So what to do if my stock becomes non-compliant? So this is the key question that we are addressing in this webinar today. All right. So as the first point says over here, you have 90 days of grace period to exit that stock. So if you're invested in a Sharia compliant stock when the stock was compliant and it subsequently becomes non-compliant, you have about 90 days grace period to exit that stock. Now let's study what happens during the grace period and after the end of the grace period. So during the grace period, all gains, whether they be capital, trading, or dividends from that stock, from the date the stock turns non-compliant till the 90th day or the earlier date of sale of that stock, can be retained as permissible income. I will go ahead and elaborate this through a pictorial representation as well, but let's just try and understand it very simply. When a stock becomes non-compliant, you have 90 days from that date to exit that stock, right? If you exit that stock before the end of 90th day period, which is the grace period, all gains that you make, whether it be trading gains, capital gains, or dividends, can be retained. Yes, normal purification on dividend will still be applicable, right? Essentially, it is as good as you still invested in a Sharia compliant stock. The reason this 90-day grace period has been given is to consider a lot of factors which take place in the market. Let's say, for example, the markets may be closed, liquidity issues, trading time, price stability. New financial number can also come in the 90-day grace period. Keeping all of these market conditions in mind, it has been the opinion of the Sharia scholars of Islamicly that when a stock becomes non-compliant, 90 days be given to the investor to exit that stock. any gain that is made within this 90-day grace period can be retained. If you get dividends within this 90 days, then those dividends need to be purified using the normal purification process, which is already given on the app. Now, what happens at the end of the grace period? All gains, whether capital trading or dividends, need to be fully purified. That is donated to charity. What this means is, if you continue to hold the stock beyond the 90-day grace period, any gain that you make after the 90-day grace period has ended needs to be fully donated to charity. So let's recap this, and this is the most important slide in today's presentation. If a stock which is Sharia compliant becomes non-compliant and you're already invested in that stock when it was Sharia compliant, you have 90 days to exit that stock. Now, how does this 90-day get calculated? It is a 90-day period from the day the stock turns non-compliant. Simple as that. Any gain that you make within this 90-day grace period can be retained completely. Dividends that you get within this 90-day grace period needs to be purified as per the normal purification process. But if you continue to hold this stock beyond the 90-day grace period, or if the 90th day grace period has ended and you continue to hold the stock, any gain, whether it be trading, capital, or dividends that you get from this stock after the expiry of the grace period has to be completely purified. So that is the basic principle. Any questions? Start watching the questions in the Q&A section over there. Okay, I will come back to this in just a bit before I okay. I think the presentation is clearly visible to everybody. Now, this is a pictorial representation of the 90-day grace period rule. So let's say you bought the stock when it was $10. It turned non-compliant on the 1st of April when the stock price was $30. So the 90th day, the 90 days grace period starts off. So red means non-compliant periods, green means compliance periods, and the grace period ends, which is the 90 days, ends on the 1st of July, and the price is 60. This is a pictorial representation of how the grace period looks like. So you invested into the company at $10. The company turned non-compliant on the 1st of April when the price was 30, and the company grace period for exiting that stock is on the 1st of July, which is the whole of April, the whole of May, the whole of June, and the 1st of July, exactly matching the 90-day period. Any gain that you make between this period, within the 90-day grace period, can be retained. Let's look at a couple of scenarios as we go forward. So scenario 1, that is, if you sell or exit before the grace period ends. So the scenarios are, the buy date is 1st of April, the price was $10. The stock turned non-compliant on the 1st of April. So the grace period, which is the 90-day period, ends on 1st of July when the price was $60. But you sold the stock or exited the stock before the grace period ends. In my example, the sold date was 1st of May. So 1st of May is before the end of the grace period. And let's say the price was $50. The entire gain that the investor makes will be considered as permissible gains. So how do we calculate the gain? Very simple. That is $50 minus $10, which is sell price minus buy price. Sell price minus buy price. That is 50 minus 10 is $40. Since the exit was made before the end of the grace period, this $40 is completely permissible to be retained. I have written it over here. So permissible income is $40, which is $50 minus $10. This amount, which is $40, can be retained as permissible income, and there is no need to purify this amount. This is because the stock was sold before the expiry of the grace period, that is the 1st of July. Since the stock was exited before the end of the grace period, any gain that was made by the investor can be retained. Let's look at the second scenario. So if you sell or exit after the grace period ends, what and how is the permissible and the non-permissible income calculated. Let's look at the same example. The buy date was 1st of April. The price was $10. The stock turned non-compliant on the 1st of April when the stock was when the price was $30. Grace period ends, which is the 90-day period, on the 1st of July, and the price was $60. But you sold it after the expiry of the grace period, which is the 1st of August. That means the principle is all gains that you make till the grace period ends are considered permissible. Anything after that needs to be donated. So that's why I put this as green and this as red. So permissible income, which is $50, that is the price at the end of the grace period minus the price at which you bought it. That is $60 minus $10 is $50. This amount, $50, can be retained as permissible income, and there is no need to purify this amount. This is because all gains till the grace period end will be considered permissible. But you sold it after the end of the grace period. So let's calculate the gains from the grace period till you sold that stock. So since you sold the stock at $70 after the grace period ended, and the grace period end day price was $60, so 70 minus 60 is $10. This is non-permissible gain. Income to be purified, which is $10. This $10 has to be donated to charity, as it is a gain after the end of the grace period. Simple as that. I hope this pictorial diagram helps you in finding out the permissible and the non-permissible gains. Now let's look at a couple of scenarios which surround this thing. So if you sell, the scenario 3 is sell or exit after the grace period ends at a loss. So let's say in this, when you trying to sell at after the grace period ends, but you are still under a loss because you bought it at $10. Let's say over here the price was, let's say, $5 now. At the end, at the sale date, what do? There are two things that you can do. It is highly recommended to sell at the end of grace period. You need to exit that stock when the grace period for holding that stock has expired. Because from a Sharia perspective, you become a partner when you own the share of that company. Correct? That is the basic principle. If you hold the share beyond the grace period, you are considered as a partner in a non-permissible business. Because the company has become non-permissible, you still continue to own the share in that company, you will be considered as a partner in a non-permissible business. Right? That is the reason it is highly recommended that you book the loss and exit the stock at the end of the grace period. It is highly recommended. There is a second view as well, which tells that you can continue to hold that stock and sell it when you recover your initial investment. So that you don't make a gain on it, you recover your initial investment. The first step, which is to exit the stock within the grace period, is highly recommended. The second approach is also permissible, but it is not it's not a recommended thing that is to be done. So this covers the loss situation. All right. Now, there is a peculiar situation which comes in, and this is bringing me to the end of my presentation today. Please do punch in your question and answers over here so that I can take them quickly. So what to do if I am already invested in a non-compliant stock? So this slide discusses the legacy investment issues of investors. What this slide means, let me give you a background to this. Sharia compliant investing is a relatively newer subject. A lot of people might have made investments for the long run by just doing a simple analysis of the company, by looking at its perceived revenue status and investing money into it. Seemingly compliant companies may be non-compliant as if you apply the criteria on it in a correct manner. For example, Amazon. Amazon looks to be an e-commerce delivery kind of a marketplace kind of a concept. But if you apply the screening criteria on it, it seems to fail the Sharia compliant screening criteria. But if you invested in this stock before you knew that there is something like Sharia compliant or non-compliant assessments, what do you do in such cases? What I mean to say is that you have already invested in a stock unknowingly whether it was a compliant status or a non-compliant status. And now you find out that it is a non-compliant stock. What do you do if you are in a loss situation or if you're in a profit situation in these scenarios? Irrespective of whichever scenario you are in, this is what is recommended. So if your legacy investments prior to following Sharia compliant stocks is now non-compliant, it is highly recommended to sell that stock immediately. So irrespective of whether you knew it was compliant, irrespective of the fact whether it is making a profit or a loss, if your legacy investment, after coming to know that it is non-permissible, it is your obligation to immediately exit that stock. The argument is the same. What is the argument? Because from a Sharia perspective, you become a partner when you own that share. If you hold that share beyond, there is no grace period over here. Apologies for this typo. I'll change this quickly. So if you continue to hold this stock after you found out that this is non-permissible, you are considered to be a partner in that non-permissible business. So it is highly recommended that you exit immediately. So if you're in a profit situation, you may either choose to donate the profit or retain it. It's up to you. The argument for retaining the profit is because you were not aware of the non-permissible status. Hence, you made an action for which you may not be liable because of your ignorance. So you can retain it. But it is again highly recommended that you donate this profit because you know that this has come from a non-permissible company. If you're under a loss, again, you have the option to hold and sell when you recover your initial investment. So if you're under a loss, if you follow the first advice, which is immediately exit, so you book the loss. But if you don't want to book the loss, you can continue to hold that stock till it recovers your initial investment, which is a less recommended principle. Clear? I hope these slides help you in terms of understanding the rules surrounding Sharia compliant investing, right? And that leads me to the Q&A session. Anything that you did not understand, I will be happy to come back to the slides and take up your questions. Let's get back to the Q&A sessions. Before I start my the Q&A session, decent number of questions have already come in, alhamdulillah. Let's start with the questions. Tasmiya says, does BSE 50 Sharia are all Sharia compliant? Tasmiya, as you can see, the name itself talks about Sharia. If you go and read the documentation about the BSE 50 Sharia, you will find out that it is a Sharia compliant index, which has a Sharia committee, and that Sharia committee is very credible as well. So the short answer is yes, BSE Sharia does give a list of Sharia compliant stocks, and it is a Sharia compliant index available in India. Next question, Rami. My question maybe is the ROO recent IPO. Rami, I'm not able to understand your question, but it doesn't matter. If you're asking about the compliance of an IPO, it's very simple. If you go on the Islamicly app, under the forum section, there are a separate page dedicated to all the IPOs which are going to come up, and the compliance information of those IPOs are given separately. So we are probably the only app which is listing out all the upcoming IPOs separately and giving you the compliance information on the IPOs. There are probably by now 50 to 60 IPOs which we have covered. Let's say, for example, this is the forum section. I'm not sure if you can see it clearly. And there is the stock select IPO report section over here, and you will get all the IPOs listed over here in one shot. It's slightly slow today. Like for example, recently there was a Deliveroo IPO. All of them are covered over there. Whether that particular IPO, which is ROO, is Sharia compliant or not, I will not be able to comment. You will have to look the compliance on the app itself, inshallah. Somebody is asking me what is the meaning of PECE and PL. I don't think this is related to only Sharia, it is financial knowledge. So I'll skip that because people over here have come in to understand Sharia aspects of halal investing. So I will stick to that. Someone is asking me how this 90-day grace period has been determined. Very good question. A lot of people will definitely ask this question, that why 90 days? There is no precedent which can be seen from the scriptures which talk about this 90-day period, because investing in halal stocks or Sharia compliant stocks itself isn't explicitly covered in the scriptures. So it is done through ijtihad that the scholars have done. Now, if you ask any investment manager, if you ask people who are equity traders, what is a reasonable time to make changes or to create turnover in the portfolio, the general answer that many of these experts who are seasoned investors, who are fund managers, who are asset managers, who are traders, will say a 90-day period is a reasonable amount of time in the stock market scenario for making a turnover or making a change in the portfolio. Hence, the Sharia scholars have gone by this expert opinion that a 90-day period to exit a particular stock is a reasonable time frame for exiting a non-permissible stock. So if you go ahead and ask questions that where is it written in the scriptures, I don't have the answer for that, very frankly. The reason it has been done is due to the experts' opinions, and which the Sharia scholars have agreed to, that 90-day period takes care of all kinds of scenarios which may hit the investor or which may enable the investors or hinder the investor from exiting that stock. So that's why the 90-day period has been given, that beyond this, there is no exemption. Hence, this 90-day period has to be followed strictly. Someone is asking a question, Walaikum Assalam, brother, what to do if a particular stock is shown as non-compliant in Islamicly App, but another trustable source shows it as Sharia compliant? So basically the question is that if there is a difference in compliance between one app to the other app, or basically from one source to the other source, the answer is very simple. First of all, you need to figure out which source is the most trusted, or which source follows a criteria which you think also is the right criteria, or which source is the most popular criteria, or which source has the most credible Sharia board. Whatever your reason be, just stick to one Sharia criteria. That is the most recommended advice by most scholars. That if you see that, let's say for example, Islamicly has given a compliance assessment and it is in contradiction to the assessment from some other app, you have to decide which app you're going to follow, whether us or them. If you decide to go with them, it is highly recommended you go with them all the time. You can't be picking and choosing from multiple sources. This is recommended, but if you want to do it, nobody is going to stop you. So short answer is, you figure out which is the most credible one, which has the most experienced Sharia scholars board, which app has the most dynamic research team and has the most experienced research team. Basis of whatever your assessment is, or whatever your criteria is, if you figure out one app, just follow that. Simple as that. The reasons for differences can be a different topic altogether. Maz, if you're asking you about hadith or a quote for the 90-day period, I have already answered that question. Siraz says, what if there is no gain but rather loss? I think I've answered that question. Even if you're under a loss and it is recommended that you exit the stock before the end of the grace period, you can continue to hold the stock till you recover your investment, but that approach is a less recommended approach. Zakir asking the same question. Please explain this 90 days from the books. I have answered that question. This is based on a practical experience, basis the experts, the opinions of the experts. Someone is asking a question. As an employee, do I need to purify stocks if they are part of my compensation? It's very simple. If you get stocks as part of your compensation and that stock is currently non-permissible, the most recommended view over here is that you exit that stock and cash it and keep it. That means whatever you've been paid is in the form of a stock. That stock is currently non-permissible. That means currently, if you exit it immediately upon that stock getting vested into you, the gain that you make is part of the compensation for the hard work or the labor that you put into that company. But if you continue to hold that stock and make capital gain on it, because that stock is non-permissible, any capital gain that you make on that stock cannot be used. It is non-permissible and hence cannot be retained. So, simple answer, if you get a stock which is part of your compensation and that stock is non-permissible, exit that stock and retain that earnings. Simple as that, because that income is not from selling that stock, it is income for your hard work or your labor. A lot of questions have come in, which is talking about the law situation. My slides have explained that. Like, for example, Aizat is asking the same question. Stock turned non-compliant. At the end of 90 days, it is still non-compliant. I am at a loss. What should I do? Highly recommended to book the loss and exit the stock, because holding the stock beyond the 90-day period means that you are a partner in a non-permissible business. Do you want to be in a state where you are in a partnership in a non-permissible business? The obvious answer is no. Hence, you should exit the stock at the end of the grace period. But if you feel that the loss is quite high and you may not be able to bear it, the scholars also, I wouldn't say recommend, but allow in very rare circumstances, and it is highly recommended not to follow this approach. I would put it this way, that you can continue to hold that stock and exit when you recover the principal. Someone is asking me that for vested shares, employees have to pay between 40% and 50% federal taxes in the US. Does that count as purification? Paying taxes on your capital gain or on your dividends does not count as purification. It is counted as expense against that purification. In my last webinar, which was on dividend purification, we discussed clearly that let's say you have a purification to be conducted on your dividends, which is $2, and there is a 20 cents taxation or a transaction cost or a brokerage cost, which you will have to spend on that $2 proportionate purification amount. What you need to do is you need to remove that cost of transaction, which is the 20 cents, from the $2 and donate the balance, that is $1.08. Do not count the amount of money paid as taxation, amount of money paid as brokerage, as akin to have given those amounts as part of purification. No, purification has to be done at the end of paying all of those charges. Yes, you can deduct the proportionate cost or the proportionate taxation before you purify, but the net amount definitely has to be purified. just by paying taxes. You cannot say that I have purified that amount. Taxation is a separate item. Purification is a separate item. Khalid is asking me a question: how often should we purify? It depends how you would want to do it. People do it quarterly, people do it monthly, people do it annually as well. So it depends. So it doesn't matter what periodicity you follow. It is highly recommended because dividends are paid annually. You also do a purification number annually, or you do a purification number when you exit that stock, because you would have had all the information required to conduct the purification. So at the end of exiting or booking a profit or a loss for any stock, you can do a purification at that point in time if applicable. Brother Khalid says, what if we do not know when the stock turned non-Sharia compliant? On the Islamicly app, it is very easy to find out when the stock turned non-compliant. Firstly, if you invest in a Sharia compliant stock, add it to your portfolio on the Islamicly app, and it will instantly notify you whenever that stock changes compliance. As easy as that. The second thing is, if you're talking about legacy, on the Islamicly desktop version, we show the historical information about the compliance of any stock. I will just log on to the desktop version and probably share a screen with you as well, so that you understand what I am talking about. For example, let me pick up a very important stock, which a lot of people have been investing in, and search for it. Just 1 second. And then I'll share my screen as well. Let's look at some stock which has changed compliance so that we can see history properly. Yeah. I've got that stock. I'm sharing my screen now. If you see this stock, which is NEO, you can see on the Islamicly desktop version that it was compliant from this date to this date, became non-compliant for a short period, then turned compliant again, became non-compliant, compliant, and is currently non-compliant. Simple as that. So if you want to see all of this exact precise dates when it changes compliances in the past 18 months, you need to get the subscription to the Islamicly desktop version as well. It tells you on the history part exact dates also. Can you see the dates? It will tell you what date. November 19th is when it became non-compliant over here, and then on December 3rd it became, December 4th it became compliant. So Islamicly app helps you track the Sharia compliance status as well. On a given daily basis as well, you get a notification probably at 12 noon your local times that which stocks have become compliant and which compliant stocks have become non-compliant as well, because the data is updated on a daily basis. Hence the changes in compliance is also given on a daily basis. Muhammad says, can we voluntarily wait for 89 days and sell it a day before the 90th day, and I shall retain all my gains? Please clarify. Absolutely. If the rule has been made that you have 90 days grace period, you can definitely, you're most welcome to hold it on till the 89th day and retain all the gain. Brother Rahim is asking a question: if you have large investment in stock and suddenly it becomes non-permissible, selling out within the permissible period will hit the investor with huge tax in the US. The only way to get out would be with time and not all at once, otherwise you will lose much. What is your comment on this? For example, Boeing For example, Boeing. Very easy question. Whether the quantum of gain is large or small. I have covered all the scenarios which the Sharia scholars have gone through. If the stock has become non-permissible, you have 90 days to exit that stock. You need to exit that stock within the 90-day period. You can continue to hold that stock to plan your taxation, but there is no point of doing it, because any gain that you make from the end of the 90th day period till the time you sell the stock has to be donated 100% any which way. While you get zero gains for holding the stock for beyond the grace period, from a Sharia perspective, you are counted as being a partner in a non-permissible business. Do you want to remain in that state? So that is the question that people have to ask. Whether you make a gain, there's disadvantages from a taxation perspective. All of these things have been considered, and the 90-day grace period has been given. Nothing beyond 90-day grace period can be tolerated by the Sharia scholars, because this in itself is a large amount of period for investors to make that churn. Abdul is asking, what are the zakat implications on initial investment after exiting? Regarding zakat, I will retain my comments as of now. Inshallah, we are going to release an article on this, which will cover all of these scenarios, because it is a couple of things are still under research by our research team, and a couple of things are still out there with the Sharia scholars. Hence, I am reserving all my comments regarding zakat on stocks. But there are different sources where there has been a decent enough mention about how to treat for zakat. Like one of the sources which I have read very recently is the IFG source, which tells you about the treatment of zakat on equities. A very good read. Siraz is asking a question: can one keep his shares, and if/when it becomes Sharia compliant, he continue to keep it but donate any profit made whilst non-compliant? Can one keep his shares? Shiraz, I'm not sure what you are asking. If you are asking a question that if you invested in a Sharia compliant stock, that stock became non-compliant, yeah, it has breached the grace period, and you continue to hold that stock, and with the intention that if you make a profit, you will donate that thing, and with the intention that you will donate the profit beyond the 90-day grace period. And after that, if it again becomes compliant, you continue to hold it. I mean, this is not a recommended practice by the Sharia scholars, because of the simple principle that beyond that 90-day period, you are a partner in a non-permissible business. It is not recommended to continue to be in that state. So it is not recommended to follow this strategy. So at the end of the grace period, you need to exit that stock and book your losses if you have any, or book your profit if you have any. Muhammad Nasir says, how does Sharia address ETFs? Yes, there are a couple of Sharia compliant ETFs in the market. More are coming. Essentially, to be a Sharia compliant ETF, it has to be looked into by a Sharia scholars board or a Sharia advisor, and you need to find out if that ETF has a Sharia compliance certification. If it has a Sharia compliance certification, which the ETF manager will be easily able to provide, then you can, alhamdulillah, invest in that ETF, and all gains that you get will inshallah be Sharia compliant. But if you invest in a conventional ETF and think that you can purify it, that approach is absolutely not correct, because it is literally impossible to purify the returns that you make from a conventional ETF. Ikram says, Assalamu alaikum. Our company gives us discounted stocks every 6 months against the money we let them deduct every month. We just thought it is Sharia compliant due to its nature of business, but as per Zoya, it is not Sharia compliant. How should we manage it? We sold and used the money in the past as well. As I said, if you get stocks from your company as part of your compensation and that stock is non-permissible, it is best that you exit that stock immediately upon it being vested with you. All the gains that you make after you sell the stock will be considered permissible because it is akin to getting reward for your labor, that hard work that you put in as an employee. But if you continue to hold that stock and make capital gains out of it, that capital gain component will be considered non-permissible because that return is on a non-permissible thing, which is that stock. Mars is asking the same question, why the 90-day period? I've answered this repeatedly. 90-day period is keeping into account the expert opinions of people in the stock market. There is no solid 90-day period mentioned in the scriptures regarding exiting a non-permissible stock. Vildan Siyuruk is asking a very good question. Is the profit calculated from the time of the stock becoming non-compliant or what? Because in Indonesia, we have regularly lists published by the Financial Services Authority based on the screening criteria arranged by the National Ulema Council every 6 months. Yes, it is calculated from the time it becomes non-compliant. In this case, since the list is given out every 6 months, and if you're following that list, then at the end, then the 6 months, whenever you find out that a stock has become non-compliant, you have 90 days. But I'm sure that Sharia board also has its own rule. So please go through that Sharia board's rule as well. So let me repeat myself before I take the next 5-10 questions and probably end this webinar in another 10-15 minutes, inshallah. Please do review us if you like us. It is very important for other people to hear what Islamicly is about and give us a solid review on the app. If you don't have the time, just rate us by clicking on the stars, whichever you feel is the right one, and we will be humbled by your review. The second thing is, if you are looking to upgrade yourself in terms of getting the paid subscription for Islamicly, now is a good time. For the next 1 hour, we are giving away the annual subscription for 50% discount by applying the Islamicly 50 coupon. In addition to this, the first 10 people who will subscribe in the next 1 hour will get $5 cashback as well. So that could be an additional 10% discount. So please go for it. This is the best opportunity. Okay. Siraz is asking a question. Can you please clarify the debt to assets ratio and how to calculate it from the company reports? Brother Siraz, Islamicly does not follow that approach. We follow the approach of financial ratios to 36 months average market capitalization. Using all of that ratios, applying all of that ratios, Islamicly app gives you the compliance information of more than about 40,000 stocks now globally. So you don't need to calculate any of the ratios. It's completely done for you by an expert research team having 20+ years experience in this, having been guided by Sharia scholars who have, alhamdulillah, more than 40 years of research behind them, and they have been, alhamdulillah, the pioneers in this space. So Islamicly app makes it easy for you. These webinars help you get more insight as to how we work, so that you understand that the Islamicly research team knows what they are doing. They understand the aspects of screening, and you get a better understanding about the nuances of Sharia compliant stocks as well. But you don't have to really make notes about this. You can just rely on the information which is given on the Islamicly app. It's as simple as that. Nonetheless, if you're also asking about whether assets-based screening is better or market cap screening is better, there is an article on our blog talking about this. My colleague will put in the link in the chat section right away so that you can have a read about that as well. Please do remember, a lot of the questions that come over here in the webinars, most of these questions are already answered in most of our articles that have been published on the app as well as on the blog. Very short, simple language articles have been published. Please go through that. You will understand the credibility. You will understand the methodology. You will understand the nuances of Sharia equity screening. Hence, we be very transparent as to what rules we apply and how they are applied. to give you a peace of mind that when you follow the Islamicly app, you are in good hands. Inshallah, you will figure that out as well when you start using the Islamicly app. Let's move on. Zach is asking a question, can you purify ETFs for non-compliant holdings? The answer is no. It is literally impossible to figure out the purification ratio to be applied on conventional ETFs. That's my personal opinion. Someone is asking, can you share these slides or this webinar's video record? All our webinars are available on our YouTube channel. There's a separate playlist called Islamicly Webinars. The YouTube channel name is Islamicly. Just search it by the same brand name and you will get the channel. Subscribe to it so that you know whenever the video is uploaded, you can figure it out. In addition to this, on the top banners of the app, this video will also get published. As you can see, the last webinar's video is also there, and this video will get replaced over there. So everything is transparently available on the app as well. Nikhat is asking a question, why is it permissible in those 90 days when the stock turned non-compliant? It is a grace period, right? So whenever a grace period is given, it doesn't mean that you are in violation. A grace period copies the characteristics of your status prior to the grace period ends. That's a technical understanding of grace period. So although the stock is non-compliant, the gains that you make within the grace period are also considered to be permissible because it's a grace period, right? You can exit earlier, you can take your time. It encompasses all the scenarios which the investor might face, and hence the 90-day period has been given. So the short answer to your question is the characteristics that you get during the grace period is akin to when you were in the compliance period. That is the principal, characteristic of grace period. That's the answer. Nothing to do with Sharia as such. It's just common logic principle. But the Irfan is saying what to do with profit received from Sharia compliant stock. If you get a profit from a Sharia compliant stock within the grace period or when it was compliant, you retain the entire profit. See our last webinar on purification. There also we clearly tell you that any gain that you make, which is capital or trading in nature, if the stock is in compliance, then there is no purification to be applied on that. Purification needs to be applied only on the dividends that you receive from the company. Mars says, but there are stocks that do not match your criteria. I'm not sure what you're saying. So if you can rephrase your question, inshallah, I'll be happy to answer. Mustafa says, Assalamu alaikum wa alaikum salam. I'm new to this and my question, and I am a bit skeptical about halal and haram. Is it halal or haram to do this? I'm not sure what the question is over here. If trading in stocks, if you're asking if it's halal or haram, it is definitely halal. There are rules about it. There is a complete article, and there is an additional webinar that we have done initially telling and explaining why investment in stocks is considered to be a halal activity and is Sharia permissible. So I'm not sure what your question is because it's not very clear. Muhammad says, are you covering Turkey very well? Alhamdulillah, we have good coverage in Turkey as well. If there is any stock that you want us to cover in the Turkish market, just put up a screening request and we will update that stock as well. We have a research team in-house, and within 24 hours, we cover the stock and we notify you as well on the app. Nikhat is asking a question, if a company, for example, Raymond, is having its land parcels in balance sheet are at cost. If you take its market value into consideration, it will pass the Sharia test. What to do in such a situation? I'm not sure if this is going to affect in our assessment, and that is the reason we use the market capitalization, because it's an absolute number which is a democratic number and not subject to manipulation by the company management. So Nikhat, in this in your question, in respect to Islamically, it does not affect, because Islamically uses in the denominator the market capitalization number. So whether the land parcel is valued at cost or is marked to market, it doesn't matter in the Islamically criteria. Mustafa, you asked me a question probably in some other language. I will not be able to answer that because I am not able to understand that question. Nikhat is again asking a question. Assalamu alaikum wa alaikum salam. I understand earlier if a company is less than 33% debt, its products are halal to buy, but on what basis? It is a very confusing question. If a company's debt to its let's say market capitalization is less than 33%, it is one of the criteria which makes the stock Sharia compliant. It does not mean that if the product of the company becomes Sharia compliant. So if a pork manufacturer has a debt to market capitalization less than 33%, doesn't make its product, which is pork, Sharia compliant. Simple as that. What we are concerned about is the stock of that company, the listed stock of that company. So the criteria has to pass the business screening and the financial ratio screening. There's a detailed webinar on that as well. You can refer to that about financial ratio screening and what is sector screening. Inshallah, you will get a better understanding of that. Someone is asking if both apps have the same Sharia scholars. Oh, very good question. Someone is asking me a question that if two different apps have the same Sharia scholar, but the analysis of a stock is different, what do they do in that scenario? It's very simple. It boils down to the research team, which actually does look into that stock basis the rules of the Sharia board. The Sharia scholars do not look at every stock individually. They look at issues, they look at rules, they look at guidance. So it also has to do a lot with the experience of the research team, which has worked directly with the Sharia scholars, and whether they have the expertise of understanding or asking back such relevant questions to the Sharia board. The nuances of Sharia screening needs to be asked back to the Sharia board and gotten a reply for. What we have seen in the past 15 years that I have been doing this, that even if there are the same scholars, same criteria is applied by two different screening providers, the results may differ. And the only reason the result differs is the quality of research that is being conducted by one screening provider versus the other. There should not be any other reason apart from that. Okay, I'm coming to the end of the questions, and inshallah, I will end this in just about 5 minutes. So I'll go quickly on this. If you have any questions, please post it quickly. Salahuddin is asking, is it necessary to purify the profits from permissible stocks who have their partly income from haram sources? I mean, the stock is permissible, but it may have income from haram sources, which may be less than 33%, which makes it Sharia compliant. Brother Salahuddin, you need to get a clear understanding as to how stocks become Sharia compliant. Highly recommend to you to watch the webinar on Sharia screening process. To answer your question, purification is a process of eliminating the haram income which the company has. What is it applied on? It is applied on the dividends that is received by the company. Do not confuse yourself by this 33% rule. This 33% rule applies to interest-bearing debt divided by the average market capitalization of the company. It does not apply to the revenue. The ratio applied to the revenue is 5%. A company will become sector compliant. That is, from a business perspective, it will become compliant if it has more than 95% revenue from halal sources. Less than 5% revenue from haram sources is tolerated. Now, this 5% test does not include interest income. But when you apply purification, interest income plus non-permissible incomes of the company, whether operating or non-operating, everything is considered divided by total revenue of the company. A ratio is arrived. That ratio is applied on the dividends that the investor receives and the company pays, and that amount has to be donated to charity. Very, very simple. Brother Feroz is asking me a question that I think this 90-day rule, where is the hadith or where is the reference in the Sharia? There is nothing that I can quote because there is joint stock companies, investment in stock markets, all of these things did not exist at that point in time. But the rules of fiqh can be applied to such scenarios, and the leading scholars in the world have consensus on this area. Okay, Muhammad is asking a very good question. I am building a portfolio of shares that pay dividends. As such, I do not buy and sell. I just buy and keep. I now understand if the stock loses compliance, I should sell it. If it generates a dividend within the grace period or after, what is the status of the dividend payout? So if you buy a stock which is Sharia compliant and you sell it within the grace period, there are two things which can happen. So if you sell it within the grace period and if you receive a dividend within the grace period, the dividend is also considered to be permissible income subject to purification, which is the normal purification. That is the purification ratio given on the app. So before the end of the grace period, if you get a dividend, the dividend receipt is considered permissible, but apply the purification ratio on it, which is a regular purification ratio, which is given on the app itself. But if you get a dividend after the grace period, there are two scenarios about that. If the dividend received was after the grace period, but the record date of that dividend was within the grace period, then that dividend received after the grace period is also considered permissible subject to normal purification ratio. This is because the due became within the grace period. But if the dividend that you received after the grace period became due after the grace period and the record date was after the grace period, that means you continued to hold that stock beyond the grace period in a state when it was non-permissible, and at the expiry of the grace period, in that scenario, the dividend received is entirely considered non-permissible and has to be donated 100% because you received a dividend from a non-permissible company in the state when it was non-permissible. Dilawar is asking, I have my 401k savings in mixed portfolio. How can I know whether it is Sharia compliant? Very simple. Look at your portfolio, download it into an Excel and upload that Excel on the Islamicly desktop version. It will instantly tell you which stocks are Sharia compliant and which stocks are not. The non-compliant stock needs to be exited, and the treatment of the gains has been discussed in this webinar. Maz is asking, BSc Sharia stocks do not comply on Islamicly. Why? I don't see a reason why that would happen. If because what I understand is BSc Sharia index follows the exact same criteria as the Islamicly. The only difference could be that Islamicly updates on a daily basis, whereas a change in numbers would be affected on Islamicly the very next day, whereas at the index level it takes a month because they update it every month. That could be the only difference. Otherwise, it's absolutely the same data. Someone is asking a private question regarding the 2% comes from interest loan, for example, Cisco. I recommend that you watch the previous webinar on dividend purification. All your questions will be answered in that webinar. Brother Muhammad is asking a question about intraday. He says, I am doing intraday as you said. If I can carry forward, it's halal. But some other mufti said that intraday is not halal till the share is not in your name. So I'm confused whether we have given our daleels, we have given the view of our Sharia scholars. That is one view. The other views you have taken from some other learned scholar. It's up to you now which one you follow. How can we guide you? Zakir is asking a question. What if a stock turned to compliant after 90 days, then continue holding will be better? A very good question actually. So you held a stock which was compliant, became non-compliant during the entire grace period as a non-compliant, but you still continued to hold it. and let's say after 120 days it became compliant. So from the 90-day to the 120-day, whatever gain you made is impure income that has to be donated, and you can continue to hold that share. Zureda is the same question. Ishraq Ansari is asking a question with regard to a mutual fund in India. The answer is very simple. Since it's a mutual fund, it's a structured product. Even if there's a difference between compliance between Islamicly and that fund, I would highly recommend that you continue holding that stock, because it also has some reason why it was considered permissible. So continue holding that stock. There is no problem. Again, Zureda is asking, do we need to purify the stock if it is Sharia, if it is sector compliant, as US companies normally report their earnings quarterly? I'm not sure what the question is. Siraz is asking a question, if a company's non-compliance was based on a debt to asset ratio of 40%, why they can't purification amount be based on this percentage, that is donate 40%? I mean, Firaz, unfortunately, you'll have to compare apples to apples and bananas to bananas. So debt to asset ratio does not have any bearance on the purification. It doesn't make any sense, unfortunately. Tasmia, I've answered this question again. What she's asking is if a stock before 90 days or after 90 days, the stock again becomes compliant and you have not exited, what happens? If the expiry of the grace period has happened, you continue to hold that stock and that stock becomes compliant, let's say in 120 days, from the 90th day to the 120th day, that part needs to be purified. The rest you can continue to hold it, but it is not a very recommended thing to do. Muhammad is asking a question. As I stated earlier, I buy dividend paying stocks to keep. What should I do if a stock that keeps going in and out of compliance, just like the example you just showed from a desktop app? Irrespective of whatever is the scenario, the rules apply. Exactly, the rules have to be applied in the same manner. So there cannot be any exemption given. Whether you are investing for the long run, short run, for dividends or for capital gains, the rules are rules. Okay, there are so many questions. Still, Faridul is asked the question, since the stock can be in and out of Sharia compliance status, what if I have a stock and found it had for a month? I'm not sure what the question is, Faridul, so you'll have to reframe it. Yeah, what to do? Shibili is asking a question, what to do if the stock becomes compliant during the grace period? It's a very good question. If the stock becomes compliant during the grace period, you are as good as you were. Nothing needs to be done. You continue to hold that stock, because during the grace period, it has become compliant. That means nothing has to be done. You continue to hold that stock as if it was always compliant. Muhammad is asking a question. Suppose a stock became non-Sharia on November 1 and again become Sharia on December 1. Whereas if I still hold it even after December 1, will my entire earning from October 1, where I actually bought the share, to January 1, where I exited, shall be retained? The simple, his question is that if a stock becomes compliant during the grace period, what does it do? It's the same answer. If the stock becomes compliant again during the grace period, nothing has to be done. You continue to hold the stock as if it never became non-compliant. You're good as you were. Safiqul is asking how to check Sharia compliance for small case. Input all of those stocks in your small case application on the Islamicly app, and you'll instantly find out which stock is Sharia compliant and which stock is not. Zureda, what if is asking a question, what if the Sharia ETF contains non-Sharia compliant companies? For example, whatever. Islamic ETF contains some company which is a defense company. I mean, we've said it many times in the past. Just because it's a defense manufacturing company, many scholars, a large part of scholars in the world, do not consider companies which are in the space of defense or armaments or arms manufacturing. They consider such companies to be Sharia compliant because of the view that an arm or an ammunition in itself is Sharia neutral. The user can put it to a Sharia compliant or a non-compliant usage. So if a Islamic ETF has a stock which is in defense sector, that means the criteria followed by that ETF, which is Islamic, also considers such companies to be permissible. Don't try and piecemeal it. Already we are so fragmented. Trying and piecemealing all of these things is just going to lead us to nowhere. So just follow, if it has a Sharia certification, just follow that. Abdul is asking a question, can we invest in ESPP of a non-Sharia compliant company? If employed there, it is a benefit and not part of compensation. Answer is no. Someone is asking a question, if invested in a non-compliant stock unintentionally, the stock then turns compliant, can we hold that stock? The answer is yes. From the time it became compliant to the time onwards, the returns are compliant. From the time it was non-compliant, you will have to purify that part. Somebody is asking me intraday questions. There's a detailed webinar on intraday separately. You can go and view that webinar on our YouTube channel. It's a big topic. Mutahir, I've answered this question earlier, which is receipt of shares from your employer, which are non-permissible. Exit that stock, retain the gains. Muhammad Maz is asking, my question is, if you hold a stock for 10 years, suddenly it becomes non-Sharia compliant, and what do you do? Whatever we said in this webinar is what you have to do. Whether you hold it for 10 years, 20 years, doesn't matter. The rules will remain the same. Stock turning compliant during the grace period have been answered. Shabina is asking, if company selling pork and alcohol, how would we know what percentage is revenue from this product? All the hard work is done by the Islamicly research team. On the Islamicly app, all of these information is available. You can go ahead and just click and find out which stock is Sharia compliant, and the purification ratio is also given. All the hard work is done by the Islamicly team, so don't worry about that. Muhammad says, does Islamicly have the option to create a portfolio of stocks and I get notification if any stock gets non-compliant? 100% yes. That is one of the key features. From the universe, you can add a stock to your portfolio. When that stock changes compliance, you get notified instantly. Whenever you open that portfolio, it will also share number of compliant stocks and number of non-permissible stocks in that portfolio. All of these things are made easy on the Islamicly app. I have answered most of the questions. I have repeatedly mentioned that I will answer 100% of all questions. Please don't repeat the questions. It just puts us out of the thought process. Nikat is asking a very interesting question. Does purification apply to non-Sharia compliant stocks? In the first place, you're not allowed to invest in a non-compliant stock. Any return that you make from a non-compliant stock has to be donated 100%. There is no point of investing in a non-permissible stock. If you invested it, you're just blocking capital. Someone is thanking me, saying that Jazakallah for this session. One suggestion is to quickly introduce yourself initially for those who don't know you. There is no need to knowing me. I am just a humble soul who is the co-founder of Islamicly App. All the information and the credibility of the Islamicly App is given on the app itself and on the Islamicly website. I hope this webinar is helpful to everyone. And if you have not subscribed, please do subscribe. And if you like what we are doing, please do give us a review on the app stores. Thank you for your time. Please, it's a humble request that do subscribe and do follow our social media channels for all the latest updates, as well as give us a review on the app stores. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.